Welcome to Weekly Market Update, where we talk about everything mortgage and real estate related. As always, we have some great information to talk about, so let's jump right in it. First off, CoreLogic reported that rents rose 3.7% in April, which is down from 4.3% in March, showing that rents continue to decelerate on a year-over-year basis. This is the 12th month in a row that we've seen this year-over-year deceleration, which will help inflation in the coming months as it catches up to shelter costs. So this is great for the consumer price index number, because shelter cost is a big component of that calculation. So we'll keep a close eye on that. As for housing, we all know we're very, very strong when it comes to the market right now when it comes to prices, because we have very low inventory and strong demand. So Redfin just reported that over 33% of all transactions have sold over asking price. So reason why I wanted to bring that up is because in the Chicagoland, Cook County area, we are forecasting that home values over the next 7 years will appreciate about 4.61% year over year. So on a $400,000 purchase, that over the next 7 years, that home will create over $141,000 in appreciation and wealth. So if you're in a multiple offer situation right now and you have to go a little bit above list price or ask price, then just think about getting into that home so that way you can see where things are going to be at in 7 years and really appreciate all of that appreciation. So call me if you have any questions about that, because we want to be able to get you approved for those options and set you up for success. Now, housing starts, which is good news, rose by 21.7%, which was much stronger than the estimate, and year-over-year starts are now higher by 5.7%. The Home Builders Association their confidence is stronger than we've seen in about a year, and that's because they're having a lot of demand, because there's not a lot of inventory for the existing homes. So a lot of buyers that can't find something that is existing they're now going to new construction. So this will actually help. I feel like it will help the existing home sales and try and create a little bit less competition so we can get you under contract faster. So as for mortgages and inflation, so Fed meeting breakdown. The Federal Reserve left rates unchanged last week. They are anticipating that they will increase 2 more times by 25 basis points. They forecast that core PCE inflation is at 3.9% by the year end, up from 3.6%, and unemployment rate by year end will be at 4.1% by end of year compared to the 4.5% previously. So the bottom line is that the Federal Reserve, they paused rates at the meeting for June, giving themselves more time to assess incoming data, but they seem hell-bent on getting core PCE inflation down to 2%, which will be very hard to do in the coming months. It's important to note that the Fed projects on the Fed fund rate, those projections are wrong about 2/3 of the time. So we'll have to see what happens if inflation continues to look better than expected, and jobs continue to come down, and job unemployment goes up. The Fed will possibly pause rates again in July. So we'll have to see what happens with that. And then finally, the Mortgage Bankers Association released that mortgage applications data last week went up by 2% from last week to this week, and we are down 32% still year over year. A lot of that has to do with inflation, and so we just got to continue to work on the supply and demand and get these rates down a little bit for you guys. So interest rates were flat from last week to this week and right around 6.7%. Call me if you have any questions, mortgage or real estate related, and look forward to talking to you soon. Bye.